What up, guys? How we doing? Welcome to another episode of Backtest Fridays. This is episode 2 where we break down the market from the simplest standpoint, only support and resistance, right? So let's get it started. So the market recently gave us a level, right? So this level was from about 2 weeks ago, I think it was. Yeah, about 2 weeks ago, the 20th of March, right? So the market gave us one rejection, two rejection, and then came for a third rejection. So let's break down the third rejection. Wait, before we even go that further, we need to take advantage of this level of support right here. All of this was support. Let me redefine this information a little bit for you guys. All of this area down here is support within the market. All of it. You see me? Don't sleep on these wicks. They mean something. Alright? So based off the market opening, where was it? The market opened right here. At the starting of last week, I immediately went into a buy right here. This is where the market opened. So let's jump down to some low time frame so you guys can see what I'm talking about, right? So this is where the market opened. Let's remove this line. This is where the market opened with this gap right here. We need to take this gap into consideration. What is really happening here? So the market, the last established level of resistance was made on the 29th of March, right? Now, this is where the market opened and the market gapped above this level. Now, gaps are very important within the market. A lot of people operate under the principle that gaps have to fill. Nah, that ain't true. That ain't true. Gaps don't have a fill. You have gaps out there in the market that has been there for days, weeks, months, and them still not fill. But gaps really tell you that banks are trading on the weekend, right? Banks are the only people that have access to financial markets to be able to trade on the weekend. So what this is telling me is that there's a previous level right here, but the banks chose to buy at a higher price throughout the weekend, which is why we end up with this gap. Now, in its simplest form, and I've said this a million times, like throughout the last Backtest Fridays video and all of that, I'll say this a million times. Past resistance, future support. Past support, future resistance. Like, it's gospel, guys. It does not get simpler than this. So we have an established level of resistance being acted on some form of level of support over here. So going down to a lower time frame, the 5-minute time frame, we can take easy trade opportunities off this entire area. We could take a trade opportunity just off the close of this candle. Well, this is a bit more risky, but you could have taken it off the close of this candle and put your stops below this level for, that's a good 36 pips. But as you know, I like to use higher stop losses, anywhere between 35 and 45 for GBP pairs, because they have some crazy movements, and our aim as a trader is to protect our capital. Like, the aim of the game is capital preservation. You don't want to be out there losing money. That's crazy, guys. You see me? So we have entries along this level. Our first take profit would have been right here, and our second take profit could have been the known H4 level of resistance, right? So that's one trade covered right there. And then immediately after that, you see me, the market gave us another trade opportunity. It's like the market was out here playing ping pong last week. You see me? This is a known level of resistance, the known H4 level of resistance that gave us this big push, this push, this big push. You see me? Known resistance. So look how we're gonna play this. We're gonna put this right here. Actually, we're gonna replace it with its cousin. You see me? That's long position. We're gonna replace it with short position, right? So we see we took a buy from right here, broke this level of resistance, came to this H4 resistance. We buy off support and we sell off resistance, guys. It does not get simpler than that. So analyzing this area for the perfect entry, let's jump down to our low time frame as we usually do. Zoom in, You see me? Get a feel of the area. Get a complete feel of this area. Now the market gave us this level of support. So identify one major level of support so far, right? But that's not enough information for me to feel comfortable entering in the market. So I have to go down to the M5 and analyze from that time frame also to get as much details to add to my trade, right? So on the M5, I see a perfect opportunity along right here. And it's simple. I say it like a million times. Say it with me, guys. Break of support, future resistance. Like, say it 1,000 times to yourself. It is gospel. Complete gospel. So we got our break of support, rejected this level of support as future resistance with this bearish variation right here. Nice bearish variation. Can easily take our entry opportunities off that bearish variation. Hold on, where did I put that thing? Where is it? Over here, so okay, it's over here, so you see me? So our entry opportunities would be right at the end of that bearish variation, right at the end of that little box. Stops would be above the level of resistance, 24 pips. I'm not comfortable entering a GBP trade with only 24 pips as my risk, right? I like to give the trades room to breathe. But now stop say that them GBP period are crazy. They will wiki out in a 1 minute and then drop 100 pips. Trust me, guys. So anywhere between 35 and 45, depending on this case, I would comfortably just go with like, I prefer to use 40 to be honest. So I'm going to use 40. Right? I personally didn't get this trade, but I got the move up and I got this move up also. I can break that one down for you. So this sell or take profit one would have been this known level of support right here, right? Take profit one along there. Let me stretch this out a bit. So take profit one right there and take profit two would have been at the known level of support which we took the buy from, right? But unfortunately we were unable to take out this level of supports right here. But with that being said, that also gave us another entry opportunity to go along. So we just bag about 95 pips lesser, and you see me, jump down to the lower time frame because as I said, I'm not stop preach this. Same thing myself say 100 times. I should say it a million times instead. But the market gave us this level of resistance. That's just, it's going to act as support over here. Like, it's either one or two things, you know. It's either it's going to break it or it's going to reject it. And clearly by this picture, it was not about to break it. So the market came down here, shot to this level, gave us a new level of support that is basically the same level over here. You see that? Like the measurement of this area is just like 10 pips. It's in the same region. You see me? So market also gave us this descending trend line along right here. See that? Boom. Right there. So off of this area, I could comfortably go to a lower time frame and start looking for buys while all of this was playing out. Right? So the market came down to this area. Well, I'd take advantage of this area to be honest. Came down to it. Boom. Boom, boom, boom. Gave us some form of resistance right there. Alright, let me show you what I would do. This would be like an example of a trade where I have to give a lot of room for risk. So when the market came here, it gave us this level of support and gave us this level of resistance. Now this level of resistance was broken by, hold on, I'm gonna get rid of this for a second. This level of resistance right here was broken by this push up off of this level right here. You see me? It gave us that big push, but it started respecting this trend line coming down. So if I had a first trade off this level, it would actually be broke the level of resistance, came back down here, still cannot find that entry yet. Market hasn't really given us that entry yet. Had all of this level, a little trend line in between, still heavy bearish momentum along right here. Bearish momentum. Aha, I found it. Look. Like you have to really believe that every candle is telling you a story. All of right here is telling you a story, and the story that is being told is that there's heavy bearish momentum, but there's also heavy bullish momentum off of this area. But you really didn't get an opportunity to take a trade yet, because no levels of resistance were taken out. This was the first level of resistance that was taken out, but there's still no trade. Like, there's no major trade, even though this level of resistance was taken out. Right here didn't continue acting as some form of level of support. So let's go. The first real trade opportunity I would identify off this level is the break of this level of resistance right here. Right, market came down, identified this level of resistance, broke this level of resistance, but this specific area is more important to me than this area. So the market broke all of those, came back down to this level that gave the push to break these two levels of resistance, and look right along here. It's almost perfect. Look at the battle between the buyers and sellers along this area. Bearish, bullish, bearish, bullish, bullish, heavily bearish, and then this crazy bullish candle that took out all of right here. So this is our first entry opportunity along this area. At the close of that candle, run out our 35 to 45 pips in terms of stop, and we'll take our trade all the way up to the known level of resistance, which is the same level that we took the trade from. It's like a ping pong game, guys. Trend, not no name trend. You see me? From my perspective in the market, nothing no name trend. The market does whatever it wants to do. Market moves solely off supply and demand. So boom, that's another trade right there. So GBP AUD is kind of the same situation, because at the starting of the week we gave us this gap. GBP pairs are kind of similar in also, if you're trading one a certain direction, you can trade another a certain direction also, right? So simplicity. I'm not going to break this down all the way because I basically just did it with GBP JPY. The market closed here, opened down here, broke this level of resistance and respected it as support right there. You know, I'm just going to go to the low time frame and identify the same thing again over and over. So let's get it. Jump down to the M5. Where is it? Right here. Jump down to the M5. We see some form of level of resistance right here. Market broke that level of resistance, acted as support all along this area. Like at the full completion of about this is crazy. That's way too much. At the completion of this candle, I'd be comfortable entering the market, right? And here's a perfect example of why I say I use 40 to 45 pips. Like legit, if I was in this trade, I would have gotten wicked out. I was like, we have a perfect area right here, and then the market just dropped 50 pips, like 51 pips from that area. So I would have gotten stopped out of this, but I don't know if I could have get another entry opportunity, but the trade would have gone something like this. I identify my level of support and resistance. I go on the high time frame and I identify a level of resistance I would like to take my trade to. The previous level of resistance all throughout here, we have one right here. So for TP1, we're going to put TP along right here. So let me take profit 1 along this area and take profit 2. Take profit 2 would be along right here. Simple. Nice, simple 174 pips. And then watch out now. Price is dynamic. Even though right here was being respected as a level of resistance, we can alter this level down to here. We could take easy buys off this level also. We would have our TP1 right here, a TP2 right here, and our TP3 up there. So I hope you guys catching the drift that just by identifying certain levels of support and resistance within the market, we can get high probability trades off those areas, right? So moving along, gold. Like I personally have not traded this in about 2-3 weeks, but gold has just been stagnant. It's just been consolidating for the most part, and let me show now vibes how to deal with consolidation. We find the highest point in the consolidation region. So where did the market open? The market opened right here. Alt V. Come off. Alt V. right? The market opened right here. So the highest, the area that the market gave you to work with previously was somewhere along right here. So, and then it gave you another level along right here. So, so this is basic. This right here is just basically an overshoot. All of that's an overshoot. Cause if you go on a higher time frame, it's just a wick per se. You see me? So the only information we really have is this level of resistance to take sales from. So we'll jump on a lower time frame. So you see me? Could have taken a sell right here, could have taken a sell right there, but personally from my perspective, there's no trades here. There's no trade opportunities here. So I can't really identify anything. Like nothing of substance is really within this area that is worth the risk. Like nothing here is worth the risk. Like this is full on consolidation. There's no decision within the market for the most part. You see me? So there's not much I can give for gold. CAD JPY, you see me? Simplicity. At the starting of the market, we knew that this was, oh whoops, we're on the H4 time frame. I mean the 30-minute time frame. We need to start from the H4 time frame. So at the starting of the week, we could have identified this is a major level of resistance that we'd have to take into consideration. So jumping down from the H4 to the H1, let's see what we got here. We have this level of resistance from way over there. So price broke this level of resistance over the weekend. Price gapped over it. So we don't know price resistance, future support. If we jump down on this area and examine what the market is telling us, I'll go forward a bit. Examine what the market is telling us. We see the market gap over all of here. So we use the most recent price. Market has gapped over here. So came back to it, retested it one time, went about it business, came back to it and retested it again. Like guys, don't ever be fearing that you can miss a trade. Like the best trades give you multiple reasons to enter. You see me? You get multiple opportunities to enter. So just because you miss one entry opportunity, don't behave like you want to run down price and blow your account and them style there. That lame. You see me? So run in. We see our entry opportunity off of this bullish. Oh, where are we? Yeah, we see our entry opportunity right after the close of this bullish engulfing at breaker resistance future support. Like a engulfing and a support or resistance area is like gospel, guys. Don't sleep on them. You see me? So giving ourselves, this is CAD JPY. This is not really no major pair that run up and down. So we can give ourselves some conservative stop loss. We can use 25 pips for the most part. So we'll take 25 pips on our stop and we'll look for the most recent area of resistance to add as our stop loss. I mean our take profit. So we have take profit 1 along here. See that? Take profit 2 along there. Right? Simplicity. That's the only major trade I see in the market from market open, giving us a risk of basically 1 to 2, risk reward of 1 to 2, which is lame. You see me? But we could have went ahead and continue taking entry opportunities along this level. So we could have got some form of entry opportunity along right here. So and we see a little descending pattern along right there. So let me alter this up, make it more accurate. Accuracy is key, you see me? But that's all I see for CAD JPY, to be honest. 57 pips. This pair don't really dish out pips like that per se. Moving right along to AUD USD. Starting on the H4. You don't know what I have to. Yo, this was easy. Like, this was easy. Anybody could have seen this. We have an established level of resistance. All we had to do is take trades off of this resistance. And we had an established level of support from the previous week. All we had to do was take buys off of that. Buy off support, sell off resistance. You see me? As I say, you have to be adaptive within the market. So supports and resistance will come into play right in front of your eyes. So another way, a way how to find these levels out is just look left. And when I say look left, I don't mean no crazy look left like go way back in a 19 how long. Nah, gee, that's crazy. You see me? We have to take current price action into consideration. Now, another thing you guys need to take in consideration about support and resistance, and this came from a book I read. It's called Trading in the Zone by Mark Douglas. it tells you that the same people that are trading in the market over here are not necessarily the people that are active in the market at this level, right? So it's basically saying price is dynamic, right? So in the sense that you'll have resistance all along a specific area in the market, right? So it's better to use zones than lines. That's just my preference, because zones capture the entire area that some form of resistance may be acting in. You see me? So working off of this zone, I know that I can possibly find a level of resistance being transferred from over here. Break of support, future resistance. You see me? Simplicity. So knowing that I have some form of resistance over this area, I can comfortably look for sells just right along here, because look left, trade right. You see me? So jumping down to lower time frames, we have already seen interaction with our level of resistance, and hey yo, the market gave you lemons. When life give you lemons, guys, make lemonade. You see me? Watch the vibes here. Left shoulder. Hey, what just happened? Don't be out here behaving crazy. Alright, let's do that again. Have our left shoulder. Why I keep on double pressing for this? I'm like the worst right now. Alright, let's start over one last time. You see me? Hopefully I don't mess it up again. We have our left shoulder, our head, and our right shoulder. Right? So let me just show you guys how to deal with head and shoulders. Right? Let's hide all of this. Turn on my draw tool. So the general understanding of head and shoulders is that there are two places you can take entry opportunities from. Right? The first one is a bit on the risky side. The second one is more on from a confirmed standpoint. So when you have your left shoulder and your head established, you can look to use this specific area over here to take sells from, right? So you can take sells on the right shoulder from information that we got from the left shoulder, right? That's the first way. The second way is that the neckline approach. So we're going to have a neckline somewhere along here. So when the neckline is seen to be the level of support that is maintaining all of the head and shoulders, right? So when price breaks right here and retest this, simply broken support, future resistance, we look to take sells off of that opportunity going to the downside. You see me? So turning back on the candlesticks, that's exactly what we see. The market had a level of support, broke that level of support, respected it as resistance. Now you could, let me show you a perfect trade opportunity right here. Just right on the close of this rejection on the M15. I'm gonna get this out of here. Take off auto. Is just on the close of this rejection on the M15, exactly right there, you could go short. You could short the market right there. Short at the close of that candle. We don't even need to go to an even further lower time frame, because this is gospel. This is gold. Stops above level of resistance and be conservative. Even though this is Aussie, it's quite on the slow side, but give your trades room to breathe. And then we'll identify a higher time frame level of support that we would like to take advantage of. So the first level is along right here. Nah, that's crazy. The market gap right here. So alright, our first level would be right here. TP1 would be right there. Let's go to the H4 because there's a lot of noise right here. Let's cancel out some of that noise. So TP1 would be right here, and TP2 ultimately would be down here for a combined total of about 45 pips. Wow, that's lame. Like, this is why I love GBP JPY. Like, I cannot imagine being in a trade for, how long is this? I'm gonna measure this. You are in this trade for about 20 hours, and all you get is 45 pips. Yo, 20 hours from GBP JPY can give you a full 200 pips. Like, full facts. But moving along, the establishment of this level of resistance gave you multiple sell opportunities, right? You get one sell opportunity here, and you could be in sells off of this same level of resistance right now just by selling. Again, it respected it once, twice. Ultimately, if you're in any form of sell right here and you're looking to try scale, oh, it's shit, it happened already. Whoopsie, it happened at market close. I wish I did this video earlier because I'd be able to capitalize on this. Past support, future resistance, simplicity. Nice bearish engulfing along right there, or evening stars, some people would call it. Can sell right here and take profits all the way down here. Like if I did this earlier, I'd take this trade. This is a nice trade setup. Alright, moving right along. NZDJPY. Yo, for the person that asked me to break this down, thank you very much, because this was actually a challenge. The only real trade opportunity I saw along here was just one sell off this break of support, turn future resistance over here. You can enter right off this level. Enter right off this level. Stops above this zone and take profit all the way down here. That's the only thing I saw. I'm sorry I'm not really able to give you more. But then again, when the market established this level of support, you could take sales off of it over here also, but you see me, nothing major. Alright, let me drop a nugget. So split screen this. I want this to be NZD USD. Now my approach to US dollar and Japanese yen pairs are that you can chart NU and chart NJ, and it's basically the same thing. Like, take note on both sides of the screen. Right, see some form of level of resistance right here, right? We see this huge drop in price. We see a level of resistance right here. Over here is the same thing, level of resistance. So basically what I'm saying is, if you're looking to trade like GBP USD and GBP JPY, use both of them side to side to build up a picture within your head. Look at both of them to build up some form of confluence to enter the trade within your head, because they move, what should I say? They move in correlation with each other for most part. You see me? They're not always going to be in correlation, but for the most part, they are in correlation. You see me? So EURCAD, yo, watch you know. Big up to anybody where they tell me for break down EURCAD, because I actually got in on a nice short somewhere along. Where is it? At market open, I got in on a nice short. I don't know if it game play out perfectly. My stops are up here, but I'm looking for the market to break this trend line and continue pushing to the south. So trades that happened the last week, where did the market open? I'm gonna find it right here. Trades that happened last week in terms of EURCAD. 1 second, right here, Alt V. Why isn't this working? Alt V, there we go. So the market gave us a level. If you look at it from the H1, the market gave us this level. It's kind of the same with Euro USD last week. EURUSD FXCM running on this. Or was it last week? 29th, 31st. Market open right here with this level of resistance being formed. Go on the H4, you see it better. Zoom in. This level of resistance right here. Wasn't I supposed to break down Euro USD too? Well, if I was, then this would be a quick breakdown. So the market gave us this level of resistance and basically just rejected the level of resistance. Same thing with EURCAD. The market gave us this level of resistance. Where is it? Last week. Ooh, got sidetracked right here. When did the market open? Market open right here. Gave us this level of resistance. Yeah. So the only move that really happened throughout the whole of this week was just buys. But personally, I would not be looking for any buys throughout the week. You see me? I don't really trade this pair. I've never traded this pair, as a matter of fact. But in trading, all concepts are the same. So I really need to break this down from a top-down analysis standpoint. So from a top-down analysis standpoint, we know that we have levels of resistance up here, and we had levels of support down here. Then we'll jump down to our H8. I personally use the H8 chart because it blocks out a lot of noise for me, and Noise within trading is just corruption. It does corrupt your mind in the market. So refining this information, you notice what I did right there, guys? On the H8, the level of immediate supports was somewhere along right here in terms of price action. So to refine that information and make it more accurate, I jump down a time frame and I alter that level of support. Like, you need to always be accurate within the market and always use the most relevant information being presented to you in the market. So upon refining my view on this pair, the market opened right here. So the first level of interaction that we should have had before market open was this level of support, right? Always take into consideration your most immediate level of support and your most immediate level of resistance. So immediate support was this area that was given to us on the 28th of February, and immediate resistance was actually up here, right? You see me? So these are the only areas that we are interested in within the market. You see me? I feel like I'm catching a little cold. So the only trade we could have took was identifying some form of transition within the market along this area. We jump down to our M5. Now let's go to M15 so paint a better picture. Alright, so on the M15 we identified right here as our major level of resistance. So we're interactive. That's the first thing. We have to look for interaction. We identify a level of resistance created along that area. Price broke that level of resistance along all of this right here. Too much boxes. See me? Get some of these out the way. It's like I'm allergic to lines on charts. It's just annoying. You see me? So we could have took an entry right here. Like I would have no problem taking an entry right here, because this is some form of level of resistance. We'll alter a level of resistance. Price came back to the level of resistance and gave us this. I'm only looking at this market from support and resistance standpoint, guys. Always remember that there are many more tools and tricks and them like a style that we can use for take advantage of the market. Being that this is a pair that I've never traded before, like I don't have a feel for how the stop losses go. So fresh water, so I just go with like my max stop loss. I'd give it like 45 pips. You see me? And you don't know, take profit would be our first major level of resistance taken from our H1 or H4 time frame. That'd be TP1. Sorry, TP1 would be right here because this is the first major level, 67 pips. Then our TP2 would be up here. Yeah, that's pretty much it. That's pretty much it. Yeah, that's the only trade I see there. Like TP2, yeah, up here. Even though I kind of shorted the market right here, but I have my reasons for that. Now, I gave you guys an opportunity to ask me questions and I'd answer it on the video. So let me just go in my photos and pull up those questions. So the first question was, where is it? Alright, someone asked me to talk about risk management. I'm definitely going to do a video about risk management. Risk management is very important. And then someone asked, how do you identify key supply and demand areas within the market? Alright, let me run off on that. Let me use like NJ. You see me? Go on a high time frame. Now, me personally, when I'm using supply and demand, I have to go on a high time frame because the best trades come off of the H1 and the H4 levels. You see me? So this clearly shows that there's some form of demand along this area. The rapid rejection of this region shows some form of demand. You see me? So that's the furthest I'm going to go as it relates into supply and demand, because that's something I teach my students. You see me? So I don't want to be out here giving away knowledge that people paid me for free. You see me? But I'm gonna tell you something. Everything I know, I learned from backtesting daily. Like I'll spend 5-10 hours on the market backtesting, and if I can figure it out, you can figure it out also. Like you don't necessarily need to pay somebody, you don't need a mentor, you don't need none of that shit. If they can do it, you can do it also. You see me? If I can do it, you guys can do it. You see me? So that's all I can say as it relates to supply and demand. How do you determine which support levels are stronger than others? Alright, let me show now another vibes, you see me? Like, if you have a certain level of support or resistance in the market, alright, let me draw here. I go turn artist phone on. You see me? Turn on my lock tool. So we have a level of resistance right here. So, and it give you this huge push to the low side, right? Hold on. One second. You see me? This level of resistance gave you this big push to the downside. So that is one level of resistance. Now we again have another level of resistance. Right? That's crazy. Take that off. I need to stop saying that saying, yeah. Let's edit this. Alright, so we have one level of resistance. So watch that vibes here. We have another level of resistance right here. So we have one. Come on. Have one push down, a notch up, and then a push down like this. Which level of resistance do you think is stronger? The one on the left or the one on the right? Like, this level of resistance is saying, yo, nobody no want currency up here. Nobody is willing to buy up here. So there's no demand for the money up here. So the market gave you this huge push down, right? When the market gives you this huge push down, all along this area is something called limits. Limits within the market. You see me? I'm not going to tell you all what limit is. Yeah, you have to go research that yourself. You see me? So there are limits packed up along this area. Even with this one, there's still limits packed up along this area. But the fact that the market gave you this extreme push down, it shows that this is a claimed area by certain people in the market. So when the market comes back up to this level, it gives you another big push down. Versus the market coming back to this level and just, well, that's too big. That's too big. Where's the back button? I think I've been talking for like an hour while I get thirsty. Gives you like a push like that down. So just look at the movement over here versus what happens here. That just shows you how strong a level of support and resistance is within the market. Let me give a good example of that on gold. You see me? Gold gang. Gold all on my neck. Alright, so on the H4 a couple weeks ago, this is a level of resistance within the market. I think I spoke about this in Backtest Fridays last week. You see me? So this is a level of resistance in the market, right? And this level of resistance gave us this heavy push down to the low side right here. You see that heavy push. So the market just came back to that level and gave you an equally heavy push. You see me? I hope that answers your question. You see me? You can look into that a bit more, but I believe in people like researching and backtesting and spending time on the charts. So I'm not gonna give out every answer for no questions. I got nothing to say, but thank you, dangerously appreciated. Yo, big up yourself in a JM Vino. I hope I got that right. Big up yourself. I really appreciate it. I thrive off of feedback. Like, feedback is what keeps me doing this. Were your parents supportive? As I say, oh, my general, I your life, you know. You are the only person that's supposed to care what is going on in your life. Yeah, your parents are gonna care because yo, they might invest in your future, this, that, whatnot, but they may not believe in you. At the end of the day, as long as you believe in yourself and you put in the work, you're gonna get exactly what you want out of life in terms of trading. How do you know when a retracement is finished? As I say, I don't really look at trends in the market. I don't meds uptrends and downtrends. I'm more of an adaptive trader, you see me? So anywhere the market I go with it. You see me? What do you look for on low time frames like M15, and how do you analyze support and resistance on them? Alright, that goes into price action. All of that falls under price action, right? And price action is basically the candles telling you a story. So again, use right here for example. We have a past level of resistance that was broken that is acting as future support right here on the H4. So run down to the H1. This is where you have to do top-down analysis. Right? Run down to H1 and we immediately identify some form of level of support right here. So, right? So we can remove this line. We can agree that this along this area is some form of H1 support. All up here was H1 support being transferred from this level of resistance, right? So we'll go down even further. Again, draw it out for you so I make sure you see it. So we have a level of support right here. So jump on this. So we have big push up, small pullback, big push up, small pullback, push up, break of this level that was acting as support, came right back to here, right? Now we need to analyze what when we see the break of support, we should be in full observation mode, you see me? So this is what we want to analyze, because there are two areas that we can look to short the market from. We can either look to short the market from this known level of resistance right here, or this potential level of support that's going to be future resistance. So we fully need to analyze all of what is happening right here. So we don't see that the price broke this level of support. Jump down to our M5. Where you at? Here we are. So we jump down to our M5 and we notice that there's also another M5 level of resistance right here. This resistance gave you this push that took out this level of support. So that support is dead. You see me? This level gave you that push that killed this level of support. So looking at the M5, we see some form of resistance right here. And look what happened right at our level of resistance. The same thing, the one thing I'm looking for, either engulfing or a variation. This is classic engulfing. Classic. Bearish. My gosh. Alright, so we'll get our bearish engulfing and simply we'll just take trades off this level, a break. Right here, we can put our stops above right here. So, well, you see me, that'd be like 26 pips. And you see me, we'll just take advantage of the trade. We try to take the trade, go all the way down to the last level of known support. You see me, that'd be somewhere along right here. But unfortunately we didn't get that. We would have got out somewhere along right here, because this is a level of resistance that may act as a support. So a nice 26 pips to 100 pips. I hope that answers your question, as in how I know. What was your question again? Give me a sec. How do you know, what do you look for on lower time frames like 15 minutes, and how to analyze? So yeah, that basically answers your question. A lot of you guys mainly ask the same question. You see me? How do I know? How do I identify key levels of support and resistance area? That I basically answered with our other question in another one of the questions. So yeah, that's pretty much it, guys. Sound like a mouthful, but you see me? I hope you guys learned something from this video. As I say, like, comment, share. Leave feedback. Feedback is what keeps me going. And don't know, big up on yourself. For all the people that are not really Jamaican, big up on yourself basically means like big up yourself. Isn't it? That's all I could think of. And definitely follow me on Instagram at YardPips. Yeah. Later, guys.